Welcome to downtown Fremont, California. My name's Ron Cohen. I'm a tax partner with the firm of Greenstein, Rogoff, Olson and Company, and this is our short little weekly tax update. Well, lots of things going on. The tax season is starting to get into full swing, and I thought I'd mention a few issues. This Form 8960 regarding the net investment income tax on individuals. This is part of the Obamacare tax, where on net investment income, if your income's over a certain level, you pay an additional 3.8% of federal income tax. Well, for many of our higher income taxpayers, this has been a huge liability. We've been projecting it all through last year, and now it's coming due as people were working through their forms. In some cases, there's some planning that you can do around it, but it's a lot. We have several clients paying $10,000, $20,000, $50,000, $100,000 of additional tax. So please make sure that you've worked through Form 8960. It kicks in if you are single and your adjusted gross income is over $200,000, or if you're married and your modified adjusted gross income, there's certain adjustments, is over $250,000. So for most people, it's not an issue because their income is below those levels. But for a lot of high income folks, it will come as a shock as to how much additional tax this creates. In addition, there's Form 8959, the additional Medicare tax. This also has been in full swing all during 2013, but now we're seeing the results on the tax returns coming due in April. Again, if you're married and your income's over $250,000, or you're single and your income's over $200,000, there's an additional 0.9 of 1%, 9/10 Medicare tax that has to be paid. It's intended to help fund the Obamacare insurance plans. And on withholding, if your income went over $200,000, your employer started withholding the additional 0.9 of 1% in your pay already. If you're self-employed, you should have been trying to take this into account in your estimated tax payments if your incomes were over those levels. Again, now these things that were talked about in Washington all of last year, and the bills were passed in November of 2012, we've been talking about them all through last year. They're now becoming cash realities if you haven't been, and in some cases should have been, paying them in estimated tax payments or withholdings. All right, well, one little success story here. Forms 5472 and 5471 come into play where, for the 5472, if you're a foreign corporation or shareholder owning a U.S. company, that's called inbound. Or if you are a U.S. person or company or trust or partnership owning a foreign corporation, that's called outbound. In each case, inbound or outbound, these forms are required. Often they don't create any tax, but they are 8-9 pages in the case of a 5471, have to be filled out in great detail, income statements, balance sheets, all kinds of reconciliations. And if you don't put them in a lot of cases, there's a $10,000 penalty for not putting it in, even though the form itself created no tax. Well, we get new clients all the time, and we had one client from Australia who, by the time they came to us, all these forms were late. We filed the returns properly. The IRS automatically assessed a $10,000 penalty, and we were happily able to get a waiver, make this $10,000 penalty go away. Now, the reason I'm pointing this out is we were very fortunate. There's a thing called the first-time abatement policy with the IRS, which basically says if you pay payroll tax or certain other taxes and you make a mistake and it's the first time you've added any penalty with the IRS in the last 3 years, they'll generally abate or waive the penalty under that policy. But for Forms 5471, outbound, or 5472, inbound, that first-time abatement policy absolutely does not apply in the IRS manual, and we've seen that rule applied. However, in this case, this taxpayer, this was their very first time ever filing any return in the United States at all. And we were, in fact, a bit surprised that the IRS allowed a waiver of the penalty, and that was obviously good news for that taxpayer. We do a lot of international work. Bring your work over to us if you need advice with foreign bank accounts reports, inbound, outbound transactions. PFICs, passive foreign investment companies, lots to think about. Okay, moving on, again back to the Obamacare type issues. The IRS announced that they're going to need 754 people to full-time equivalents to help run the Obamacare work in the IRS in this coming year. If you're low income, if you're relatively low income and you're not, haven't gotten insurance under one of the exchanges, or you don't have insurance at your employer, these penalties are starting to kick in where it can be several $100s a month that will start coming due in April of 2015, where the IRS is required to help collect those taxes, fees. It went to the Supreme Court. The law was upheld as valid, and the IRS is staffing up to take care of that. Okay, wanted to touch on a few other things. In a letter ruling last month, if you had an S corporation and it inadvertently gave some S corporation stock to an unqualified shareholder, with an S corp, only individuals U.S. citizens, individuals can own the stock with certain exceptions. And if you happen to give it to an unqualified person like a corporation, a domestic corporation, that causes an involuntary termination of your S corporation election, can create all kinds of trouble. Well, the IRS issued a ruling saying where that was inadvertent, and as soon as the taxpayer realized the mistake they made, they went and fixed it by moving the stock back to a new qualified shareholder. The IRS treated it as if the inadvertent termination never occurred. This comes up a lot, and it's good news that they're giving some leeway here. Also, another area of compliance, Section 83B elections, which applies to people who get all kinds of stock options with new or ongoing companies. In some cases, you want to make this election because it allows you to tax a small amount today instead of perhaps a large amount later when the stock appreciates. It also can help you avoid AMT, the alternative minimum tax, and it also can start the stock being subject to long-term capital gains rates, which are lower than ordinary income rates. A lot to cover there, lots of issues with 83B elections, but one of the problems we've had in the past, the whole tax community, is where the taxpayer mails in the IRS, the 83B election to the IRS as they've been instructed by, usually their employer says, make sure you sign this and mail it in. They do that. But the second requirement is that the form has to be attached to your income tax return in the year, for the year in which you made the election. And people often who aren't using tax preparers, or mistakes are made, and that second requirement's not met. Well, in another letter ruling, a private ruling by the IRS that has some general application, they reinforced their rule that if all you've done wrong, everything else was done right, but all you've done wrong is not attach a copy of your 83B election to your tax return, that's okay. And they'll still treat the 83B election as having been enforced, which can reduce your taxes drastically in the right situation. Okay, one thing I wanted to mention, that we have an ongoing problem. Several of my clients have called. I'll just give the war story from my client. A phone room in Dubai was routinely calling U.S. people, identifying themselves as IRS criminal investigations people, and threatening the taxpayer, his wife, his employer, of immediate arrest and seizure of their assets if they didn't send in money immediately. I want to make clear, and I'm not the only one saying this, of course the IRS is saying it, and any tax professional who knows would be saying it, that the IRS simply doesn't work that way. If you get a call directly from the IRS, you've already received a string of official letters. You've probably met with them several times, and then they may call you out of the blue just to follow up on something, or if you're in big criminal issue, they'll be working on that. But as a first call, you will never get phone calls, especially threatening asset seizure or arrest of any type from the IRS. So if that happens, please first say it's probably fraud, and then you can call the IRS and you can ask them, is anything going on with my account? And after waiting half an hour or an hour to get through their phone system, they will rightly tell you, no, there isn't, and then you can actually file a complaint. But let it be known in this particular case for the taxpayer, I actually called the number in Dubai and had a nice chat, and they finally gave up the lie. They gave up their fraud and said to me, yeah, there's about 50 of us here. We just find out the names of executives and rich people who we can pick on. We get their numbers, we call them, and we threaten them, and we get maybe 1 or 2% of the people actually send us money, and that's how we're making our living. It's a complete fraud. So the IRS will never call you out of the blue and certainly not threaten you. It's just not the way they work. So thank you for listening to our short summary of some current issues. Again, we're at Greenstein, Rogoff, Olson and Company, a tax firm here in Fremont, California. We'd be happy to help. Look at our website, and please look into us next week. We'll be doing another summary. Thank you very much.